Hi everyone, Sean here from Help and Partners with a special guest, James Harding from Holding Redlick, to take us through some of the recent changes in relation to commercial leases. James, could you take us through the new Commercial Tenancy Code of Conduct and what it means for landlords and tenants?
Sure. So the new framework is the government's way of helping landlords and tenants negotiate through what is already a very difficult time being able to trade as a business in industries that are affected by COVID-19. And the framework is a series of good principles of negotiation about how rent deferrals and waivers should work. And it's very important that landlords and tenants be aware of what their obligations are in relation to this framework.
James, can we work through a simple example? If I have a tenant who has a monthly lease fee of $10,000 and their business is closed down, they're not trading because they're not an essential business, what are their lease obligations in relation to monthly rent during the coronavirus crisis?
So the business has to firstly show what their revenue reduction is and why that's been affected by COVID-19. So in your example specifically, that business would need to show, hey, we've got zero revenue and that's because of COVID. And then that zero revenue means that the landlord has to actually give them rent relief to the value of 100% of the rent. Now that rent relief has to be provided in two ways. At least 50% has to be a complete waiver of that rental. So in your example, out of the $10,000 a month rental, $5,000 of that will be a complete waiver. It won't be repayable. The other 50%, or whatever balance percentage is left over, has to be deferred and is paid at a later date. Now that later date is either over a course of term per month until the end of the lease end date, might be a year away, or 2 years, or 3 years, or 24 months, but it's whatever is the greater. So if you've got 5 years of lease left, that deferral is payable over the next 5 years. If it's only a year, you actually have the 2 years to pay it. So you could be an instance where your lease has ended, but you still have that ability to pay that deferred amount even though you're not in occupation of that premises anymore.
Okay, so in the example of a $10,000 a month lease payment, $5,000 of that would be waived, never to be repaid, and the other $5,000 would be repaid once the crisis is over the balance of the lease period, or 24 months, whichever is the lesser.
That's exactly right. And the most important thing is landlords and tenants, they need to be aware of what those obligations are. We're unsure yet if there's penalties if they don't comply with those principles, and they need to enter into some sort of formal agreement. Because remember, a lease is a contract in its own right, and you can't vary a contract generally by just a simple email. It's very important that the parties negotiate fully their obligations under the lease, and that's formalised in a document such as a deed of variation of lease or whatever the case may be. And we recommend that all landlords and tenants seek professional accounting and financial advice to work out what their obligations are and how they can formalise it, so they know where they stand in 2 years' time.
And we've seen just in Cairns, some businesses in the hospitality sector, for example, have shut down completely. Others are soldiering on doing takeaway. Is there any obligation on tenants to continue to trade during this period?
No, there's no obligation to trade. However, there are eligibility requirements for the framework to apply. The first one is your turnover has to be less than 50 million, so it would apply to, I'd say, most privately owned hospitality and other businesses. And secondly, the revenue loss that you've experienced has to be a minimum 30%. And whilst it hasn't been legislated by the states yet about how this framework's going to be implemented, the indication at the moment is that the eligibility for that 30% and any other eligibilities will match the current JobKeeper requirements to apply for the JobKeeper subsidy.
Now, in relation to turnover, needing to show a decline in turnover, has that been defined in the code, and are online sales considered turnover for the purposes of calculating the rent reduction?
Thanks. Look, Sean, that's a difficult question because your revenue might have been declined over the last month or so, but if you try and compare it to a year or so ago, there might have been instances in your business where it has increased your revenue but perhaps not your profit. So you might have put on 3 new staff that increased your revenue substantially. So between now and last year, even though you're closed, your yearly revenue might show that you've made more revenue. So in those instances, how do you justify that you've experienced a loss in the revenue? That answer is not clearly defined yet, and I think it would be up to making submissions to the government or to the landlord about, well, how are you justifying your own revenue loss? And you should talk to your accountant or your bookkeeper about how you can estimate or how you can show in evidence that decline.
So it seems like whilst there's a framework has been put out, a lot of it is going to require good faith negotiations between tenant and landlords to make sure a satisfactory outcome is achieved.
That's correct. And the framework even says in instances where a business is not eligible for the framework, the principles should still apply, because that's just acting in good faith. And businesses have an obligation, and I think just generally in this country, we all want to get each other through this difficult time.
From a landlord perspective, should they be concerned that personal guarantees or other securities they have under their commercial leases will be compromised by this new code?
It will, and there is some cause for concern because a landlord is prohibited from acting on a security such as a security bond or bank guarantee, and they're also prohibited from evicting a tenant for rent arrears during this COVID time. The landlord can still act on that security if either party, or specifically the tenant, doesn't comply with their obligations under the framework. So it's important to note that a tenant is still required to completely adhere to the requirements and obligations under their lease to the extent of the rent relief. So if they still have obligations to fulfill, they still have to do those. And if they don't, then the security is still going to be at risk to the landlord. So it's not a free, do whatever you want framework. We'll give you rent relief. In exchange, you've got to keep complying with your obligations, and when COVID's over, you've got to keep going.
Sure, so just to clarify then, James, it seems like during this coronavirus crisis period, securities can't be called upon by the landlord. However, they would remain intact for collection if it came to that once the crisis is over.
That's right. If there's a breach of any part of the lease that's not related to rent relief or COVID, then it's still at risk.
So once landlords and tenants have reached a mutual agreement about a rent reduction or other variations to the lease, how do they document that? Is an email sufficient? Is a phone call sufficient?
Look, we would say no, and the reason for that is a lease is a contract, and it's a very important contract, a very detailed and complex contract. So that really needs to be varied in a much more formalised manner in the way of some sort of separate document like a variation of lease or otherwise. And there's a lot more that would go into that than you probably think on first instance. So we'd recommend that you get some independent legal advice or financial advice about how that should apply. And if there's any other requirements that you need of your landlord that your landlord might have agreed to previously, not in writing, and you want to make sure in a year's time that there's no confusion over what the obligations were, if there's anything especially above and beyond what the framework requires. Because we've seen that landlords have been very accommodating. There's a lot of relief available for landlords as well, higher up than the lease. There's land tax incentives and concessions. There's also, we've seen the big banks have also deferred mortgages and other securities as well to try and alleviate that strain.
Okay. James, thanks very much for coming in and sharing your advice with us today.
Thank you.
As you can see, whilst the Commercial Tenancy Code of Conduct does provide a framework and some guidance for landlords and tenants, it's certainly not a straightforward, simple process. I'd encourage everyone to seek legal and financial professional advice to make sure that you get the right outcome for your property, your business and your tenancy.